Hello, welcome back. It is Tuesday, April 25th. Time for Mike Reads the Journal. Let's jump into it. Eventful week here for the market. So down a little under 1% right now. Percentage wise, we're down about 1.25% from where we were last week. Obviously, not a great week, but we were kind of expecting this. A lot of doom and gloom last week around bank earnings, and we're right in the middle of earnings season. So I actually expected it to be a little bit worse than this. If we look at it from where we were a month ago, still doing really well because of, kind of almost exactly a month ago, we had a really good surge. So about 3% year to date, by just below 7, yeah, about 6.8, 6.9. So earnings season has been tough, but not the disaster that I think many expected it to be. So we're just going to have to see how this goes, kind of tracks through. Along with earnings, this is the page on the Wall Street Journal that has been kind of constantly updated through this whole banking crisis, specifically around bank earnings recently. So this chart has kind of the 30 largest banks, and this is share price and the net income, and then we'll see deposits is this kind of third column over here. Net income is largely about 80% positive for most of the banks, meaning they are up from a year earlier in terms of income of the bank. Share price is almost universally down because of what's gone on just in the banking sector. So it just kind of affects everybody. As you can see, share price way down, net earnings even or up, certainly some outliers, Western Alliance way down. Of course, the one that reported yesterday, which is largely why the markets are so far down right now, is First Republic, share price down 90%. But net income still only down 33%. Bank is still profitable. Where some of this quarter they were not in this crisis, this number can be skewed a little bit. Deposits, down 40%. The rest of the deposits are largely red. However, not in a dramatic way. Typically, kind of low single digits percentages, a couple of outliers there that are not doing too great. Another one here, but nobody's really worried about Charles Schwab. Most of the banks are single digit, a little negative, maybe a couple of them a little positive. So, all in all, I think we're getting close to being calling this thing over, but we'll just have to see. All right, this next one is about corporate insiders. So they're buying more of their own stock, their own company. So if you do not realize it, if you're like on the board of directors or hold a particularly large share of a certain company, then you have to report when you buy and sell that stock. So they track that. And this chart right here, the purple is insiders buying, this tan down here is insiders selling. So selling seems to always kind of outweigh buying, which you understand that a lot of these people, or directors, CEOs, things like that, they get paid in stock often, so they're often selling stock to buy things. I was kind of amazed. These are monthly buckets. I was amazed at how cyclical this is, right? Every 3 months is way down. That has to be something to do with when earnings are reported or something about it. It's also very consistent those months. And then the other months, the other 2 months of kind of each quarter are kind of all over the place. So are we up? Yeah, I wouldn't say we're up in like an outlier way like this one over here. There's just, but they are attributing this to optimism that, effectively these insiders think that their business is going to do well. So then they obviously buy stock instead of sell it, and hoping that they'll go up. I'm not sure I'm really convinced that this is like a super positive signal. This next article is about diesel. The sliding diesel prices signal warning for U.S. economy. This is a classic example of time periods when all news is bad news, right? And right now is kind of one of those time periods with earnings coming out. We're up for a good portion of the year, up 6.5% already in the first quarter. And, the people just want doom and gloom. Diesel prices are down. That is bad, despite the fact that when diesel prices were up, that was also bad. Now, it does go in to specify, why they're talking about this. Specifically, they're saying that diesel prices are down because independent haulers are having a hard time finding, kind of regular work for their truck, right? So there are truck drivers out there who don't work for big companies, they literally own their own truck and they haul for, as kind of a independent contractor. And that, those haulers are seeming to have a hard time. They talk about diesel pricing. Now, this is a wholesale diesel pricing falling from 5.3 down to 2.6 in New York Harbor, which is halving the price. You can see the steady decline in diesel prices over the last year. Unlike gasoline that kind of bottomed out back in August, has been relatively steady, although has actually been going up a little bit recently. So you do see this divergence where diesel coming down and gasoline going up. And then, this is talking about trucking demand drops in March. So we were up here and it dropped way, way down. Certainly within the realm of what trucking has been. Now this is interesting because all the way back to the pandemic. So you'll see some other charts here. Don't go that far back. This is kind of concerning. If we look down here, similarly, U.S. container imports in 20-foot equivalent units, red is this year, blue and green are the previous 2 years, definitely down, undeniably down. However, I would love to see, this article specifically talks about independent contractor truckers, people who kind of own their own trucks. I would love to see how your standard shipping companies that, employ lots of drivers with lots of trucks are doing. Because that is, the bread and butter of the shipping industry is contract trucking, where it is contracted long in advance, and companies work with have partnerships with other companies, because the independent truckers tend to be the surge volume of when trucking is doing very hot or very cold. It is them that usually kind of feel that first. So I'm not, ready to call this absolute doom and gloom for the market, just like I wasn't, willing to call this as a real positive sign. I think we're in kind of a normal economy in terms of growth potential. We could absolutely slip into a recession depending on what interest rates go and inflation, and if unemployment were to start tick up. At the same time, I don't see it's in real dire straits. We've been kind of in this crunch period for a long time. We seem to be coming through it pretty well. All right, that is it for Mike Reads the Journal. If you like the content, please like the video and subscribe if you want to see similar videos. My May webinar is going to be on Social Security. I don't think we have a date for that yet, but it's typically like the second week in the month. I hope this has been informative. I will talk to you soon. Thank you.